Hey friends, welcome back. I'm so glad to have you. I want to thank you all for tuning in for this very important and special phone call with two of the biggest names in precious metals. We have on the line Eric Sprott, the chairman of Kirkland Lake Gold. He's also the founder of Sprott Asset Management. Eric, welcome.
Hey, Sean, great to be here.
Hey, thanks for coming back. And we also have on the line Keith Neumeyer, the president and CEO of First Majestic Silver Corporation. He's also the chairman of First Mining Finance. I own shares in both of those companies in the interest of full disclosure. I'm really excited to have this conversation. And Keith Neumeyer is joining us via video. Glad to have him here on video. Keith, welcome.
Oh, hello, Sean. It's nice speaking to you again.
Well, it's great to have you back. Guys, if you don't mind, I just want to start out of the gate talking about this GDXJ situation. Now, our friend John Rubino wrote an excellent article just the other day, Misunderstanding GDXJ, why it's actually great news for junior miners. And just to set the stage, gentlemen, for the listeners, what's really crazy about what's been happening is that we've been talking about this very thing happening because investors want to buy gold and gold-related companies. Silver, too. Assets in the GDXJ have ballooned 270% from just $1.3 billion at the start of 2016, making it a $5 billion ETF. And because of that, now they have to do some rebalancing, and it's really creating some fantastic opportunities. So I want to talk about that. I also want to mention the fact that, Eric, you have a competitor to the GDXJ there at Sprott, so we can talk about that too. But let's just talk about the opportunities here and what's going on with the GDXJ. Eric, do you want to start with that?
Sure. Well, of course, as you well point out, Sean, the problem that the VanEck found with the GDXJ was that there was too much interest in it. And their standard was they didn't want to own companies with a market cap in excess of $1.8 billion US. And in order to invest as many funds as were flowing into it, they ended up owning large concentrations of ownership in the company. So, for example, Kirkland Lake Gold, which only went in about 3 months ago, I think, they ended up at 18% of the company.
Wow.
And as you can appreciate, if GDXJ kept getting bigger, they would have to go north of 18%. But there are securities laws in Canada. If you go through 20, you have to make a takeover bid. So things became very complicated for the GDXJ. The first thing they did was they took a major allocation in the GDX, which is the senior mining ETF, and put it in the GDXJ, which is kind of runs counter to the purpose of GDXJ, but it was something that they could do without negatively affecting the market. But the premise is that it was the buying interest in junior gold stocks that caused them to change. And what they did is they changed the maximum cap from 1.8 to 2.9 billion, which meant that a number of stocks that were above 1.8 and below 2.9 were now eligible for inclusion in the fund. And, of course, those would be the highest weighted stocks because their market cap's bigger. So the stocks that existed in the fund up to, this has happened on June 17th, by the way, most of them, their weightings will fall by about 50%. So I think Kirkland was about 4, and it's going to fall to something like 202 or 204%, something like that, which means that the ETF has to sell effectively about 9% of Kirkland Lake stock. And, of course, that's true of all the other ones that are in there. I have interest in certain ones of them and kind of focus on those. So you're getting this rebalancing. People are acting in the market to sell ahead of the trade, which is going to be on June 17th. But I really believe that the trade is ongoing. I think they said already that they're starting to buy some of the more larger cap market cap companies. I might presume that they're selling some of the ones that are being downweighted, but I can't state that for a fact. But it's putting pressure on the stocks, and I think to John Rubino's comment, look, it's all good news, and ultimately when this is over, these stocks are going to go back to where they were again. So it's certainly a buying opportunity in my mind.
All right, guys. Well, I have just a couple questions. I just want to talk about the penalty being paid by companies because of this reshuffling. Keith, what are your thoughts on this? This is an excellent company that is now really trading at a discount to where it was just a month ago because of the rebalancing. Your thoughts on that?
Well, that's very unfortunate. When I saw the announcement back in November, December of 2016 that the GDXJ was actually adding First Mining to its index, I was, obviously quite happy about it. But the fact that they got up to 15% of the total issued and outstanding shares of First Mining, that's an enormous position for one passive investor that doesn't really care about what happens to price. Because it's just simply an ETF and there's no real decision making that's going on. It's just they add you to the portfolio and then they subtract you from the portfolio. And I've got a lot of experience with this. I've seen First Majestic added to the GDXJ twice and taken out of the GDXJ twice. The last time First Majestic was taken out of the GDXJ was in September of 2016, and as everyone knows, the market started to roll over a little bit in August of 2016 after a major run in the first 6 months of the year. And then all of a sudden, GDXJ announces a rebalancing and they sell 16 million shares of First Majestic in a very short period of time, in about a period of 4 weeks. So they were selling that stock into weakness. And now, similar situations occurring in First Mining Finance, where they have to reduce their holdings from around 15% to somewhere around 8%, which is about half their current holdings. And they're doing it in a period of about 6 weeks. And, the market for the mining stocks aren't exactly rip roaring right now. So, they're selling this position into a relatively weak environment. And it's really putting a lot of extra pressure on the stock, which wouldn't exist otherwise. And, it does create an opportunity for those that have the stomach for it. But, it sure does create a lot of concern among our shareholder base who quite honestly doesn't really understand, this whole ETF world.
Well, yeah, and just to be clear, it's not due to any change in fundamentals of the company. So to get a 30-40% discount on a stock price in a great company because of this rebalancing may well be viewed as an opportunity by those of us who are informed.
Mm-hmm. Well, that is true. And, a lot of the analysts point to the GDXJ and say, look, it's due to success. The GDXJ has gone from 1.5 billion to about around a $5 billion value. And that's a lot of funds that have been going into that ETF. And the junior mining space is quite small. So, that $3 billion extra dollars or $3.5 billion extra dollars that have been invested into the junior mining space in the last 12 to 18 months has really, been a huge underpinning to a lot of these stocks. And now, due to their success, they have to decide, because they got too big, and a lot of smaller companies like First Mining getting up to 15%, for example, that's too much for one big fund to own of any company, and they know that, so they have to rejig their index, and they're actually now coming back in to the First Majestic market. They're actually buying 12 million shares of First Majestic right now, adding First Majestic back to the GDXJ. So it's now the third time that First Majestic's been added to that index, which is quite crazy, but nevertheless it is what it is.
And Keith, do you want to talk specifics at all about any of the new news or the drilling results, anything at all about First Mining before we move on?
Well, for sure, Sean. The company is advancing its project. Going back to 2015, when I put together this company, 2014 and 2015, we finally got it public in April of 2015, and started on a very aggressive campaign of buying undervalued gold assets. And I think we put together probably the best portfolio of gold development projects there is in the entire world. And we looked at jurisdiction, and of course Ontario, Quebec, Eastern Canada, Newfoundland are some of the best mining jurisdictions in the world. Some of the safest places and most easily permittable places in the world. So jurisdiction's key. We didn't focus on places like California or Alaska or Venezuela or Bolivia. Places that are very difficult to work in and very difficult to permit. The next thing we looked at was grade, and then we used about a 1 gram cutoff for our minimum grade criteria, and because in the case of open pits, it's lower than 1 gram. It could be somewhat problematic to ever obviously turn it into a profitable mine. And when I'm buying things, I'm always looking at profitability. So first of all, you have to get permits to bring it into production, and then you have to make money at the end of the day. So that all comes down to infrastructure, local, closeness to roads, closeness to electricity, all those types of issues, and the economics, of course. So, we use those key criteria to build our portfolio. But now, 2016 came along, and all these assets went up in price. So, we could never, or pardon me, we couldn't continue with that aggressive acquisition campaign because the asset values of many of the assets that we're looking at just got too expensive. So we decided to start drilling. And quite interestingly enough, it's cheaper to drill for gold today than it is to buy gold ounces that it's already drilled and developed in another mining company. Going back to 2015, it was actually cheaper to buy ounces than it was to drill ounces. And so we changed the business plan according to the price or the value of these assets. And now we're developing these assets. So look, investors or shareholders should be looking at First Mining Finance to build on the current asset base and start adding ounces to the current asset base. And that's really become the focus. And I think there's going to be a lot of really good positive news coming out, towards, all throughout 2017 and also throughout 2018.
Eric, as it relates to your competitor, to the GDXJ, which is Sprott's SGDM, is First Mining Finance a part of that? And are you guys experiencing any of the same issues as investors are now turning to precious metals and precious metals related companies?
Sean, I honestly don't know the answer whether First Mining Finance is in the SGDM. I suspect it's not, because the SGDM was more mirroring the larger cap stocks, and therefore wasn't really in that pool. And I don't work at Sprott Asset Management today, so I'm not aware of what changes are going on. But I would guess, as we're talking about this, that the Sprott Asset Management people would be thinking about creating their own junior gold miners index, because obviously the GDXJ is not going to be the junior index it used to be. It's almost like an intermediate index now. So I think, as John Rubino stated, other people are going to come out with junior indices that people can participate in, and or maybe people just go to the stocks. Maybe people decide we got to do our own research to get into the category where the leverage is so much more than the seniors. And I might even add on the seniors. A lot of these seniors are having trouble increasing their production. We've seen some big sell-offs in I think Barrick and Newmont and Goldcorp recently, which could be the biggest parts of the GDX. And of course, it's a lot easier for a junior, in a couple of years to double his production than it is for any of those seniors to even increase their production by 20% in 5 years. So that's why the interest is there in the smaller companies, because they can change quickly, they can adapt to things, they move fast. And it has been a very exciting area for a long time. I always go back to, when the UE index was at, I think it was 35 in 2000, it went to something like 1,700. It went up 1,700% from the bottom, from 00 to 011. Now, that's leverage. That's an extreme bull market, and that's what can happen to the junior stocks, and that's why there's so much interest in them.
Well, I'm just amazed by the volume, the amount of money pouring into this sector. And we've been talking about this for a very long time, guys. We knew this was going to happen, and this is just the beginning, because there's so many dollars in circulation, and so few of them are in this space. I think it's less than 1%. It's just a fraction of invested dollars in the stock market are in this space. As people wake up to the fiat Ponzi scheme of the Federal Reserve and these central banks, where do you see this going? This is just the early innings of a sector that is bound to go far, far, far higher as the world loses confidence in the con game, in these fiat currencies.
Well, that's right. And that's why we saw these stocks go up so much in the first 6 months of 2016. It takes very little money for these stocks to move and for the sector to move. You can fit the entire gold mining sector, gold and silver mining sector, into the market cap of Apple. It gives you an idea of how small the gold and silver mining sector are. If you look at the total silver supply, the miners supply to the world, it's 800 million ounces times $18 an ounce. It's about $20 billion approximately, or slightly less. and that's a small market. $20 million market, in the whole scheme of things is pretty small. So it doesn't take a lot of money to come in and move that sector. But right now, obviously the trade is long the U.S., on the U.S. dollar, and the Dow continually hits new highs, and NASDAQ is continuing to hit new highs, and that's where the money is going. But those smart investors out there, they have to look at the other side of the investment world, because there will be a point in time where the money is going to start to come back to the mining sector, and that's where you have to be ahead of the game. And I think that the GDXJ supplies an interesting avenue for some investors, because they don't have to worry about doing the due diligence on individual mining companies, and there's a perception that buying the GDXJ, it's less risky, but nevertheless, for those people that really want to do the work, you're going to make more money, as far as I'm concerned, going after the individual stocks. I think Eric made an interesting point, about doing exactly that. As the GDXJ changes its criteria and increases the amount of large companies that it holds and reduces the amount of small companies it holds, it's going to have less, beta to the overall sector. And so as metals move, the gold and silver prices move, the GDXJ will likely not have the same percentage moves as it has, historically, because it was all very much focused on the junior mining sector. So, I would suggest to some listeners, or, people that really want to spend the time looking at this individual companies, that's really where they should be focusing on.
Yeah, and I think that what's going to happen... Oh, sorry, Eric, did you want to weigh in on that?
Well, Sean, I was going to add, I think the most important thing that you pointed out is that the weighting of gold investments in the world of investments is like 0.5%. And I think back in 1980, the weighting of all the gold investments was 8%. And to go from 1/2 to 8, when there's only 1.5% more gold produced every year in the world, you have to have the stocks go kind of crazy here. And, I think we might imagine that what happened from 2000 to 2011, when they went up by 1,700%, that sort of thing can happen again. And, we have not just even the printing of money, we have the whole geopolitical thing with, for some reason, people want to get involved in military things, and which is quite shocking, quite frankly. But anything could sort of tip this thing over. I think we see so many of the smart investors now mention gold that weren't mentioning gold 2 years ago. I see generalist technical analysts who are pounding the table on gold investment, and by the way, to the detriment of all other stocks. And, when these come to manifest themselves, it's going to be a pretty small door for everyone to get through. And for the smallest door of all is the junior door. So that could be quite exciting.
Well, I was just going to say, too, that, everybody listening to this interview is pretty well informed about these subjects. And we're seeing China and Russia actively move away from dollar trade and towards trading in gold between themselves. And so nation states are waking up to what's going on here. And I just think what's shocking about it, gentlemen, is the fact that even as we see these problems in the GDXJ occur because of demand swelling, we see the COMEX and we see the COT and we see the manipulation of the physical assets continue to go on unabated. And it really is outrageous, because I just want to share this as it pertains to cryptocurrencies. We watch these cryptocurrencies that are unencumbered by COMEX manipulation. Bitcoin hitting here an all-time high. Ethereum is on a tear. We should be seeing that in silver and gold. We literally should be. But again, the COMEX manipulation, can this just go on forever, Eric? I know the answer is no, but my God, look what's happened to silver over just the past week or two. They took it down $1 in what, 8 trading days? It's ridiculous.
Yeah. Well, one of the problems, of course, is its options expiry. And during every options expiry, there's a theory that the price of the product that's expiring, the bankers that tend to control the market describe it as max pain. What is the price that we got to get that commodity to, that our customers, the guys who own the options or sold our options, either one, because the banks, they write the tickets on these options. They're the ones taking the cash. They want them all to end up being valueless as much as possible. So Max Payne, I'm sure on silver, was well below the 1850 because all of this was done over a time period. And it seems obvious to me that they wanted to get it down to something like 1725, so that most of these options, whether puts or calls or whatever, would expire worthless, and the banks would run away with the money, which they do every time, which sort of tells people it shouldn't be an option, by the way. But I think that's a big part of it. Options expired on the COMEX on Tuesday and the LBMA at 11 a.m. in the morning on Friday. And I think with those out of the way, that we could see these both metals come back to and exceed their former highs because the interest is there. We've had some stunning data for March where Hong Kong ships something like 112 tons into China, that India had imports of, I think it was 112 tons or 120 tons. So there's a mammoth numbers when the mines only produce 220 tons a month. So they've already accounted for all the production just in those two data points, let alone all the other, places in the world that are also consuming gold. So I think the underlying fundamentals for the gold trade in the physical sense are good. And, of course, in the sense of the fiat money, the geopolitical, the ridiculously leveraged banking system, the excessively praised stock market, all of those lead to the same conclusion that you got to have more precious metals in your portfolio.
Yeah. Well, the manipulation cannot go on forever. It will come to an end. It's just that, I interviewed Craig Hemke, from TF Metals the other day, and he had written a great paper about the fact, just reminding people that at the COMEX, the game is that they can supply an endless amount of digital metal to meet and essentially quelch demand. And it's just, we don't see that really in any other market, I guess. And it's just extremely frustrating to those of us that know the truth and know what's up. But I guess that's why I still remain interested in the mining stocks to the degree that I am, because ultimately the big money is not in this space. It's starting to get into this space very slowly. But to your point, less than 1% of all assets are in this space. I mean, if we go to 3, 4, 5%, like we should, 10%, my God, the moves are going to be incredible. And Keith, let me ask you this as it pertains to First Majestic. You mentioned that the GDXJ is actually now in the process of adding more First Majestic back into that ETF. And I'm sitting here looking at the stock today. It's at 8, which is down from a high of close to $17, $18, $19 last year. Do you want to give us an update on AG? What is some of the good news happening with First Majestic as we speak?
Yeah, it's interesting that the stock has done what it's done. We started early 2016 at around a $500 million market cap. It shouldn't have been there. It was a ridiculous value. But if you remember, silver hit $13.30 in January, and the headlines and on the newspapers were calling for gold to go through $1,000, which of course never happened. But the sentiment on the street was very, very negative at the time, and the miners were being sold down very aggressively in January of 2016. Then all of a sudden, by February, things turned around dramatically, and money started flowing into the sector, and we saw our market cap peak out at $3 billion in July of 2016, just 6 months later. Interestingly enough, during that period of time, if you go back to January of 2016, the short position on the company was about 14 million shares. That short position dropped all the way to around 4 million shares by the summer of 2016, when the stock peaked out at around $20 US and around $25 Canadian. Now today, the short position's up around 21 million shares. It's actually about 17% of the total issued and outstanding shares is short, which is a new record for us. And it's confounding to me that people would take such very aggressive short positions. But if you look at the short position on silver, silver was 1850 just a matter of a couple of weeks ago, and as many of your listeners probably know, the short position on silver was at a record high. And so it was pretty obvious what was going to happen. And, this has been talked about, all throughout several interviews that I've been listening to among a lot of people I respect in the business. And it was expected that silver was going to get knocked down to the current levels just as a result of this concentrated short position. So it's the same players that are shorting the miners, shorting First Majestic, that are shorting the metals, and they come in and they short the equities, and they wait for that specific time where they're able to start attacking the metals, and they go in and attack the metals, and they drive the shares down, and they sit there and buy all their short positions back, and they cover their short positions on gold and silver, and they wait for the next opportunity, which could be 2 or 3 months later, or maybe a year later. But they seem to always come back, and it's shocking to me, but it's pretty clever on their part that they do this. Obviously there's a group of people working together, manipulating these markets, making substantial money doing it on the backs of a lot of really good retail investors. But it's important that people know that this is happening, because it's just part of what we have to put up with as being investors in this sector.
Well, gentlemen, before we wrap up here, Eric, I want to ask you one more thing here. I truly believe that where there's smoke, there's fire, and I think that there's an endless level of shenanigans going on at the COMEX that we can all see. But I want to talk just briefly before we go about the LBMA. They're supposed to house physical bullion at the LBMA. And you know about the silver fix, and you know about the gold fix that is controlled by a handful of banks. On March 3rd, I think it was reported that CME and Thomson Reuters are stepping down from that London silver benchmark. And it just begs the question, what the heck do you think is going on at the LBMA? I mean, is that vault just empty? I mean, what's your thoughts? I know we're speculating. What's going on at the LBMA?
Well, I'm happy to speculate on that. There seems to be a lot of problems to even get participants in the fix now, let alone reporting on the fix, which is Thomson Reuters and the CME group. And they've announced, as you point out, they don't want to be involved with it anymore. And, of course, the comment about the banks not really wanting to participate is because the manipulation is on the radar screen. Deutsche Bank did agree to manipulating silver prices. So, and they're turning state's witness. So they don't want to put themselves at risk of, perhaps being seen as manipulating, even though we see examples. Very recently, we saw an example where the gold price, I think, settled at $10 below spot, something like that, on the, in a day, and nobody could explain it. It's not the first time it's happened, by the way. So I think that there's, it's the fact that the regulators are looking over their shoulders. They've had a rigged game for all this time. And so I don't think they really want to participate. Maybe they then have to say, well, whose order is it? And, is it just you guys manipulating it? So, and probably for all intents and purposes, a lot of those fixing things was just the banks doing their own thing, okay? Like going long, going short, doing it. It had nothing to do with customers or miners or anything like that. And I would think that kind of influence on the price, when there's no bona fide buyer and seller behind it, is open to a case for manipulation. So they don't want to get involved anymore, because they don't really have a real book. They're not really dealing with miners. They're just dealing with their own attempts to make the market go where it is. So I suspect that's what's going on in the LBMA right now.
All right, very good. Thank you for that. And, you know what? I wanted to ask you guys about this. I'm sorry, I should have brought this up earlier when we were talking about the GDXJ. Can you tell us, Eric, what's going on with this JNUG fund, which I think is the Direxion Triple Gold Miners Index deal? And it's like the demand is so incredibly hot for these precious metals assets that I think that they announced that they're going to not, they closed it briefly, or what's going on with JNUG? Do you know anything about that?
Sean, it's important in the context of GDXJ to understand this, because it's the junior triple leverage fund. And what they announced is that they weren't going to issue new treasury units, because to get a triple ETF function, you got to get someone on the other side who's prepared to write the other side of the contract. And they were having to buy so much these other side of the instruments that the people who were prepared to sell them said, we're not selling them anymore. Okay, we got too much. We're taking the other side of this trade here. And of course, JNUG was going crazy. So again, it indicated, and then of course, one of the things JNUG would go in and they'd be dealing with the ETF and try to get options on the ETFs so that they could get this leverage going. And it just turned out that the supply of these options was not sufficient, that they could keep growing at the pace they're growing. So they announced that they're not initiating new trades. And it's really the same phenomenon that's happening to the GDXJ. There's too much interest. Isn't it a funny thing that there's so much interest that the stocks are going down. I mean, it's sort of the most ironic situation we've ever been in. And I think, as Rubino stated, people will find other ways to manifest their investment in the junior mining sector. That's what's going to happen here. There'll just be new vehicles created. So I think we have lots of things to look forward to in that sense. I can also say to you that as the chairman of Kirkland and perhaps looking at this potential sale that's coming out, you say, okay, let's get ready for this. Maybe this is a huge opportunity here for some of our current investors or the company or whatever. And so there's always a countermeasure that could go on. So I think it's going to be a bit of a tempest in the teapot here, and I think the worst of it's over already.
Yeah. Well, and I like the idea that informed investors can just go out and buy the stocks directly. So in the spirit of that, what is the ticker for Kirkland Lake Gold?
KL in Toronto.
And Keith, can you shout out the tickers for both First Majestic Silver and First Mining Finance, please?
Sure. The ticker for First Majestic is AG in New York and FR in Toronto. The symbol for First Mining Finance is FF in Canada. And you know the symbol for the U.S. market. I know that for a fact.
I do, as a shareholder. I believe it's FFMGF on the OTC.
That sounds right, Sean. And also my Twitter account. People can. I don't send out a lot of tweets, but if people want to follow me at Keith_Neumeyer on Twitter, they're welcome to do that.
Excellent. Keith, thanks so much for hopping on the line today. And Eric, thank you for joining us. We very much appreciate it.
It's my pleasure, Sean. Keep up the great work. Enjoy your podcasts.
Oh, you're very kind. Flattery, sir, will get you everywhere. Thank you. And guys, thank you so much for tuning in. We very much appreciate your support. Check us out at sgtreport.com. Thanks for listening. Bye-bye.
I know that with an electromagnetic pulse,
exactly,
with a variety of things that could impair the normal function of what we've come to take for granted.
If the internet goes down, the cryptos are worthless, right?
Well, and so I come and I look and I say, why do I own gold and silver? In a worst case scenario,
right,
I have the means for taking care of my family for years and years and years and years to come.